Hi, my name is Phil Glynn, and I'm with Travoy. Today's video is going to be about setting expectations with community leaders. If it's your job to raise capital for any kind of community project, maybe it's a hotel, maybe it's a new business, maybe it's a community health center, then the point of this video is to help you set expectations for the elected officials, department heads, or board members who would have to sign off on using New Markets tax credits as a tool to do that. This spring, the CDFI fund is going to announce $3.5 billion worth of New Markets tax credit allocation, and Indian Country has to be ready to move fast to make use of that for those types of community projects we spoke about just a moment ago. Now, every project is different, and Travoy has used New Markets tax credits to finance everything from higher education to infrastructure to new business development. The projects are all different sizes, ranging from $5 million to $25 million. But one thing that they all have in common is that they all use something that we refer to as the leverage structure. So what you see here on the board are all the different people or groups who have to come together to make a New Markets tax credit transaction happen. So let's assume that we're talking about your new $10 million community health center. There are all types of projects that are eligible for New Markets tax credits and all different sizes. But let's assume for today that we're doing a $10 million community health center that's going to serve community members, that's going to be located on your reservation, in your Alaska Native area, or Native Hawaiian homelands area. All projects are a mix of equity and debt, funds that come from a leverage lender, and funds that come from a New Markets tax credit investor. And here are some basic percentages to keep in mind. The leverage lender will always provide about 75% of the capital needed for a project, $7.5 million in this case. The New Markets tax credit investor provides about 25% of the funding for any given project, $2.5 million in this case. The New Markets tax credit investors are banks, financial services companies, sometimes funds of high net worth individuals. The leverage lenders can be your local bank, a large national bank, or the leverage lender could actually be the project sponsor itself. Maybe it's the tribal government that pulls together several sources of financing from grants, loans from banks, loans perhaps from other tribes, or other types of outside investment. But no matter where that comes from, this project is going to be funded primarily 75% with your money and 25% coming from their money. Those two sources together will create a $10 million qualified equity investment, or QEI. The $10 million QEI will go to a community development entity, or a CDE. Travoy is a CDE. There are hundreds of CDEs across the country with hundreds of different missions. Again, the point of this video is to help you be ready to move fast when these allocations are announced to make sure that Indian Country gets its fair share of this vital funding resource. So let's assume that we're using $10 million of a Travoy allocation. We have applied for an allocation of New Markets tax credits. We're not sure yet whether we'll get one, but we will hear along with everybody else this spring about what's available. A CDE is a for-profit, private, mission-driven financing organization that picks a specific service area. That's Travoy, and our service area is Indian Country. The funding that comes through the CDE, less fees and expenses, then goes on to what we call a qualified, active, low-income community business, or QUALIC-B. That's our community health center entity that we're talking about today. And it gets its funding in two pieces: a $7.5 million qualified low-income community investment senior loan and a $2.5 million qualified low-income community investment subordinated loan. Both of these QLICIs, or QUILICs, need to be debt for tax purposes. They can be soft debt. They will flow from the CDE to the project. They'll be used for construction, equipment acquisition, operating expenses, operating capital. Whatever the need of your specific project is, that's what we will tailor these QLICIs or QUILICs to accomplish. The best time to start planning for NMTC investment is before a project breaks ground. But if gaps are identified after the process begins, that's not too late. As you begin to talk to community leaders about using the NMTC, emphasize to them that it requires you to go through a long and involved process. We're going to work together to carry that load, but everybody needs to be prepared to invest significant time in making your project a success. As you can see, this is a very long checklist. Once your CDE and investor are on board to fund your project, this is the first thing we would send you. And we can't close your transaction or move any funds into the project's construction account until we have checked off every box on this list. Now, the entire purpose of this leverage structure, as we said before, is to use the financing that you are putting into this project to leverage some outside equity investment from our New Markets Tax Credit investor. And here's the point. As long as the project follows all of the compliance rules and delivers the community impacts that it promised it would to the New Markets Tax Credit investor, that investor realizes its entire return on investment in the form of tax benefits. That means that the capital they put into this structure does not need to be repaid to that investor at the end of the 7-year compliance period. It effectively becomes the project's own equity into the new community health center. This spring, the CDFI fund is going to announce $3.5 billion worth of New Markets Tax Credit allocation nationwide. Now, we know that Indian country New Markets Tax Credit transactions are the safest, are the strongest, and they deliver the deepest community impacts. They're the best. We need to be in a position to show all CDEs that that's true. And we need to start working now and communicating now and working together to get prepared so that when that $3.5 billion is announced, we can hit the ground running. And whether it's through Travoy's own allocation or somebody else's, to make sure that every single project that's out there that can use this funding is ready to close. To get a formal decision to move forward, you're going to have to go before Tribal Council, the Board of Directors, or whatever the governing body is that's going to make this decision with all of the information in a way that's completely transparent. But we're not there yet. And when that time comes, like I said before, we'll be right there with you to make sure that all the details are on the table so the community can make that informed decision. To make a formal decision about using New Markets Tax Credits, you'll have to present all the facts and all the information to your community's leaders. And when the time is right, Travoy will be right beside you to help you do that. But for now, to have that first conversation, introduce 4 high-level points. The first, sharing information with outside parties. The second, leasing property to the Qualic B that you'll form and conveying control of that property under that lease. The third is that new legal entities will have to be formed to close this transaction. And the fourth and most important is that the community's financial strength will have to guarantee compliance with the New Markets Tax Credit program rules. What do I mean by sharing information with outside parties? The most important piece of information that needs to be conveyed at the beginning of the closing process are the audited financial statements of the tribe, the nonprofit organization, or other community group that is sponsoring this project. If under your policies and procedures you can provide that information, the CDE and investor will want to see that right off the bat. If that's the type of thing that the tribe has policies in place to protect that information, then you should start talking with your tribal attorney or your community's lawyers now about preparing a non-disclosure agreement or confidentiality agreement that's very common for you to ask the investor and CDE to enter into those before sharing sensitive financial data. What do I mean by leasing land? If your project is on land that is already held in trust, or it's a piece of land the tribe plans to take into trust in the future, then the Qualic B needs to be able to do its construction pursuant to a long-term ground lease. That means the tribe needs to grant a long-term ground lease to the Qualic B so it can construct or rehab or operate the business or follow whatever the plan is at that site. Now, if you're doing a ground lease, it's important, again, to talk early in the process to your elected officials about granting that lease, because eventually, that lease will have to go through a full legal review and be submitted to the BIA. What do we mean by forming new entities? The most important box on that diagram that we showed you earlier is the one at the bottom in the center, the Qualic B. The Qualified Active Low-Income Community Business is your project. It is not the tribe, or the tribal college, or the nonprofit organization that's sponsoring the deal. The Qualic B is a single-purpose entity. It's a corporate entity that must be legally and technically separate from the project sponsor, from the tribe. There are 3 important reasons to do this. The first is that the project must meet the requirement of being owned by a partnership or corporation for federal tax purposes. These are typically limited liability companies, sometimes tribal corporations, but talk to your lawyers now because other formats can work as well. The second thing that goes along with that that's important to remember is it's possible to make that Qualic B be 100% controlled by the tribe or the project sponsor. Control of that new company has to be separate from the tribe, but it can remain completely under the control of your community's leaders. And the third is that using a separately incorporated entity to serve as your Qualic B narrows the focus of your compliance responsibilities so that the entire tribe, the entire college, the entire community Whoever's sponsoring the project doesn't have to qualify as being a qualified B. We want to narrow that compliance focus down to that building, that business, that project only. What do I mean by stand behind the project? Travoy works very closely with our qualified B partners to make sure that all projects follow all the regulations they have to the letter. But the reason that the tribe or the project sponsor provides its financial statements to the CDE and investor is to prove that they could repay those sources if the project ever broke a compliance rule and caused a recapture of the new market's tax credits. Providing that audited financial statement information that we talked about and sharing information in general is the best way to make a statement that the decision makers in the community stand behind this project and that there's a consensus about moving forward. We know this is a lot of information and there's a lot of ground to cover between here and your closing. Let's make sure that we talk early, often, and in person. Have this conversation with your community leaders now. And whatever questions they have, share them with us. Reach out to us. Give me a call, tweet at TravoyKC, look at our website, or send anybody on our New Markets team an email. Let's begin the conversation about making your project a success.